So this is chapter 19, part 2, and we're just continuing on our discussion of allocating support costs. We talked about ways of allocating support costs, and again, these are support costs being allocated to the production departments. From production to the product, that's where we're going to use methods similar to what we used in chapter 18. We're going to use multi-department or activity-based costing methods. So here we have the direct method, which we discussed. Each support department is going to be fully allocated out to the production departments. Sequential, we're going to take one support department, allocate it to all the other departments, including any support departments, and one by one just work our way through each support department, allocating to all the remaining departments until all the support departments have been fully allocated to the production departments. Reciprocal is the last one, and that would be taking into account all the interrelationships between all of the support departments. So for instance, we might have in the janitorial maintenance example, we might have the janitorial service providing some services to maintenance, keeping the maintenance area clean and etc. On the other hand, we might also have maintenance providing support to the janitorial service. So maybe maintenance is fixing some of the janitorial machines that they use, polishers, vacuums, things like that. So they'd be using some of the services of the maintenance support department. So they'd both be, in effect, using services from one another. Now, if there was two support departments, it wouldn't be too difficult, but you could imagine the more support departments you get, looking at all those interrelationships among the support departments would be very difficult. And the way that you actually solve that is using simultaneous equations. So that could get very complicated, and we're not actually going to go through that. In fact, the only method that we're really going to look at is just the direct method. So that's really the only one that you'll be responsible for. And so let's take a quick example on how to do that. So here under the direct method, I've laid out an example. We have total factory overhead, including support department overhead of $630,000. We're going to go ahead and allocate janitorial services based upon square feet in the production departments. And we're going to go ahead and allocate maintenance support department costs on the basis of on the basis of machine hours in the production departments. And that makes sense. Janitorial based on the size, and maintenance based upon how much the machines are running. This is going to be probably how much they break down and how much maintenance they're going to require. So what I've done is laid out the support departments. We have janitorial and maintenance, and then the two production departments. In this case, we've assumed cutting and welding. So that we have 4 departments in total, 2 support, 2 production. We've laid out the total factory overhead. So factory overhead in janitorial is $50,000, maintenance $80,000, cutting $200,000, and welding $300,000. And so our total factory overhead is $630,000. The square footage in the production departments, cutting is 2,000, welding is 8,000, and machine hours in cutting is 10,000, and welding is 6,000. So again, what we're going to do is just allocate janitorial services. Why don't we start with that first? And again, that's going to be based on square footage. So what we're going to do is we're going to allocate that $50,000 on the basis of square feet. And so if we look up above, we've got 2,000 out of 10,000. So we want to take 2/10 of 50,000, and that's going to be 10,000. And here we want to take 8,000 out of the 10,000, so 8/10 of 50,000, and so that's going to be 40,000. And so that's going to be how we're going to allocate the 50,000. So again, it's just proportional to the square footage in the production departments. For maintenance, we're going to go ahead and allocate the $80,000. And again, same thing, proportional to the number of machine hours. So here, in the cutting area, we had 10,000 hours out of a total of 16. So 10/16 times 80 is going to give us 50,000. And here in the welding, we've got 6,000 out of the total of 16,000. And so that's going to be 30,000. So that's how we've allocated our 80,000. So what we're going to do is add those up. Total allocated costs to the total support department allocation to cutting would be 60,000. And to welding would be 70,000. And I'm just going to slide this up just slightly. And so our total factory overhead now for just the production departments is going to be the 60,000 plus the 200,000. So we're going to have 260,000. Here we've got the 70 plus the original 300 of just production. So we're going to have total overhead here of 370. And again, the total there should be our total of 630,000. So that's again how we would allocate that the 130,000 of total support costs to the production departments. And now these would be allocated to the different products. Based upon multi-department or activity-based costing methodologies. So the next portion of this chapter relates to another allocation question, and that's the situation where we have joint costs. Joint costs refer to costs that are indistinguishable from one another relative to the end product up to a certain point. So for instance, we might purchase crude oil. We might spend some costs to begin to refine it up to a point where we can identify it as either being gasoline, kerosene, or jet fuel. So all the costs up until this point have been basically indistinguishable. We don't know how much of those costs to assign to gas, kerosene, and jet fuel. So if this cost was, let's say, $1,000, the question would be, well, how much do we assign of that cost to gasoline, how much to kerosene, and how much to jet fuel? Clearly, those costs were assigned, but do each of them get a third? Do each of them get some other percentage based upon some other factors? Once the product is identified, then if there are additional costs, then it's easy to add those costs in specific to those products to come up with a final finished cost for each product. But the problem is, at this point, we just have one big lump sum of costs, and we don't really know to what that lump cost relates, to which product it specifically relates, because we're refining a barrel of crude oil that's going to end up being part of 3 different products, and we don't know exactly how to allocate that cost between those 3 products. So there's a couple different ways that we can do that. And by the way, at the point in time where the product now becomes distinguishable, we call that the split-off point. So at the split-off point, Now we know that what we're dealing with is gasoline, kerosene, and jet fuel. Before that, we were still refining a barrel of crude oil, and all the costs were associated with that crude oil. Now, going forward, we're going to be either working on finishing a product, the product of gasoline, the product of kerosene, or the product of jet fuel. So we're going to know that those costs are specifically traceable to those particular products. So that's the question in this particular example. How would we allocate the $1,000 of costs among those three products? And then from there, we would be able to add any additional costs onto that. So there's 4 different methods that we can use to allocate, in this case, this $1,000 of joint costs. The first method we could use is just to simply divide up the $1,000 based upon the physical units that are produced. So if we made, if 50% of the total quantity was gasoline, then gasoline would absorb 50% of the total cost, or $500 of the total $1,000 processing cost. So it's simply just divided up according to the amount of physical output. Weighted average would be to weight the physical output based upon complexity. So for instance, if we produce the same quantity of all three, normally they would each get a third. But if it was twice as difficult to produce gasoline as kerosene, then gasoline would pick up twice the amount of costs that kerosene would. And so that would be factored into that calculation. So the weighting would take into account either production complexity, difficulty in producing it, or time that it takes to produce it, or other things that in the production run would account for the fact that the cost should be higher in association with the production of that product. Another way to do it would be to look at the market value of that split off point, and if gasoline was worth twice what kerosene would be, it would get twice the cost that kerosene would get. The idea being there that the market value would be an indication of the underlying cost, and that would be a good measure. And finally, the net realizable value, which would be taking the value out here of the finished product and using that as a proportion of the cost. So if the finished value of gasoline is 3 times that of kerosene, then gasoline would get 3 times the amount of cost that kerosene would. So when allocating that $1,000, after taking into account the quantity, gasoline would somehow get 3 times more than kerosene would get based upon its ultimate finished value when all the processing costs are taken into account. So we'll come back in the next part and we'll do a couple examples.